Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today I will discuss some group discussion topics related to the internal promotion examination for banks. Today marks part 13 of my Path to the Corner Office series. Parts 1 through 12 have already been published and are available for interested individuals to explore. Bank promotion exams are the pathway for banking professionals to pursue career growth and advancement within the banking sector. Each public sector bank organizes these exams internally, allowing individuals to demonstrate their skills, secure higher positions, and benefit from increased responsibilities and rewards. Bank promotion exams are organized by banks and financial institutions to evaluate, identify, and promote deserving employees to higher roles within the bank's hierarchy. These exams are usually structured to assess candidates' knowledge, skills, and competencies in various aspects of banking operations, management, finance, and customer service. While the format of the bank promotion exam may differ from one bank to another, it typically consists of written tests and interviews. The Bank of India has announced the promotion examination notification for the transition from clerical cadre to general banking officers cadre, junior management grade scale 1. Additionally, promotions for officers moving from their current scale to a higher scale have also been released. I am sharing some important group discussions topics that may assist eligible candidates. Digital banking versus traditional banking. Pros and cons. Pros of digital banking. Convenience, 24 by 7 access, reduced operational costs, and enhanced customer satisfaction. Cons of digital banking. Cybersecurity risks, digital divide in rural areas, dependency on technology. Pros of traditional banking. Personalized customer service, more secure transactions, trust building with personal interactions. Cons of traditional banking: higher operational costs, limited hours, and slower processing times. Discussion points: can both coexist effectively? Complete digital transformation possible in a country like India with its diversity in tech adoption? Role of banks in achieving financial inclusion in India. Importance of financial inclusion: encourages economic growth, reduces poverty, and empowers marginalized sections. Challenges faced by banks: infrastructure in rural areas, digital literacy, and trust issues among the unbanked population. Banking initiatives: PM Jan Dhan Yojana, digital financial services, business correspondent model, mobile banking for remote areas. Future strategies: expanding digital literacy, leveraging technology like UPI, and creating targeted products for low income groups. Impact of artificial intelligence and automation on banking jobs. Positive impact: automation in repetitive tasks can improve efficiency, reduce costs, and enhance customers' experiences. Concerns: potential job loss, skill gaps among current employees, and dependency on technology. Adaptation and upskilling. Importance of reskilling employees, new roles in technology management, and customer relationship management. Future of human workforce in banking. Will the need for human interaction persist, or will technology replace it entirely? How effective are recent RBI measures in controlling inflation? RBI's role in inflation control. Tools like repo rate, CRR, SLR adjustments, and monetary policies. Recent measures: changes in the repo rate, controlling the money supply, and policy announcements. Effectiveness: examining whether these measures have helped stabilize inflation and their impact on loan affordability and savings. Challenges: balancing inflation control with economic growth, considering global influences on India's inflation. Can India achieve a cashless economy? Advantages of a cashless economy: reduced corruption, easier tracking of money flow, convenience and cost saving for the government. Challenges: digital literacy, cyber security, rural access, and trust issues with digital transactions. Government initiatives: Digital India program, BHIM UPI, RuPay cards, and incentives for digital payments. Long-term vision: is a fully cashless economy realistic, or should the focus be on reducing cash dependency? Is financial literacy key to India's economic growth? Importance of financial literacy: encourages informed decision making, better savings and investment habits, and improved financial planning. Challenges: low levels of financial literacy in rural areas, lack of access to financial education, and gender gaps. Is banks' role in financial literacy: conducting awareness programs, providing simple products, and including financial education in customer service. Impact on economic growth: how improved financial literacy can lead to better economic outcomes and reduce poverty. Public sector banks versus private sector banks. Who is more customer friendly? Public sector banks offer stability, better for rural administration, focus on social welfare, but may have slower processes and less focus on customer service. Private sector banks more customer centric, faster processing, higher adoption of technology, but may focus on profit over customer welfare. Discussion points: should customer service be prioritized over financial inclusivity? How can both sectors learn from each other? The role of banks in supporting small and medium enterprises (SMEs). Importance of SMEs: key contributors to employment and GDP, and vital to economic growth. Challenges faced by SMEs in getting loans: high collateral requirements, lengthy approval processes, and risk aversion by banks. Government initiatives: Credit Guarantee Fund Scheme, Mudra Scheme, and Stand Up India Scheme. Banks' role: offering accessible loans, reducing documentation, and creating customized financial products for SMEs. Future of branch banking in the digital age. Branch banking's relevance: essential for non-tech savvy customers, elderly, complex financial services, and rural banking. Shift to digital: convenience of digital transactions, reduction in operational costs, and faster service delivery. Hybrid model: blending branch and digital banking to ensure inclusivity while pushing digital adoption. Discussion points: can branch banking continue to thrive alongside digital services? What balance will banks need to strike? Data privacy and cybersecurity in the banking sector. Importance of data privacy. With the rise in digital banking, protecting customer data is critical for trust and security. Challenges: increasing cyber threats, rapid tech changes, and regulatory challenges. Regulatory measures: RBI guidelines, IT Act, and GDPR-like regulations. Banks' responsibility: investing in cybersecurity, educating customers on digital safety, and maintaining compliance. Pros of should public sector banks be privatized? Pros of privatization: improved efficiency, better customer service, reduced political interference, and focus on profitability. Cons of privatization: threat to financial inclusivity, job insecurity for employees, and potential neglect of social banking needs. Government's perspective: disinvestment and mergers for operational efficiency without losing social responsibilities. Balanced approach: can selective privatization help without compromising financial inclusivity? Impact of climate change on banking and financial services. Climate risks: potential loan defaults in sectors impacted by climate disasters like agriculture and real estate. Green finance: opportunities in financing renewable energy, promoting greenhouse bonds, and eco-friendly business models. Banks' responsibility, encouraging sustainable projects, reducing environmental impact, and adapting policies for high-risk areas. Discussion points. How can banks lead in climate action and what policies should they adopt for a sustainable future? Role of banks in boosting agricultural growth in India. Significance of agriculture. Major contributor to employment and food security in India with a large population dependent on it. Challenges for banks. Risk of loan defaults, collateral issues, fluctuating market prices, and weather dependency. Banking initiatives. Kisan credit cards, interest subvention schemes, and crop insurance. Future strategies focusing on agricultural technology, crop specific loans, and providing risk management solutions to farmers. Should banks be allowed to enter insurance and mutual funds business? Benefits, additional revenue sources, cross-selling opportunities, enhanced customer offerings, and better financial inclusion. Risks, conflict of interest, potential distraction from core banking, and increased complexity in operations. Regulatory perspective, guidelines from RBI and SEBI to ensure customer protection and prevent monopolistic practices. Discussion points, how can banks balance banking with other financial services and what measures are needed for responsible expansion? Financial impact of loan waivers. Are they sustainable? Advantages of loan waivers. Relief to farmers in distress, politically favorable, and helps vulnerable sections of society. Negative impact. Financial burden on banks, increased NPAs, moral hazard, and decreased repayment discipline. Alternative solutions. Interest subvention, crop insurance, financial literacy, and targeted loan assistance rather than blanket waivers. Long-term view: can loan waivers be sustainable, or should banks focus on structured support for the distressed? Role of banks in building digital literacy among customers. Need for digital literacy. Increased adoption of digital banking, risks of fraud, and ensuring inclusivity. Challenges for banks. Limited reach in rural areas, varying literacy work levels, and reluctance to adopt technology. Bank initiatives, digital education workshops, simple interfaces, mobile banking for rural areas, and customer support. Future strategy, partnerships with government programs, creating region-specific digital literacy program, and using vernacular languages in banking apps. Importance of corporate governance in banks. Purpose of corporate governance ensures transparency, accountability, ethical behavior, and customer trust. Challenges faced by banks: conflict of interest, transparency issues, NPS, and risk management. Regulatory framework: RBI guidelines on board structure, disclosure requirements, and ethical standards. Impact of good governance: builds trust with customers, reduces fraud, and supports sustainable growth. Impact of global economic slowdown on Indian banking sector. Effects of global slowdown: reduced investments, impact on exports, increased NPAs, and currency fluctuations. Challenges for Indian banks: decline in business and loan demand, pressure on foreign investments, and increased credit risk. Strategies for resilience: diversifying loan portfolios, strengthening risk management, and focusing on domestic markets. Discussion points: how can banks prepare for external shocks, and what strategies can minimize impact? The role of corporate social responsibility (CSR) in banking. Importance of CSR in banking: builds brand image, helps in community development, and aligns with regulatory requirements. Areas of focus for banks: financial literacy programs, rural development, healthcare, education, and environmental conservation. Challenges in CSR implementation: resource allocation, accountability, and measuring impact. Future perspective: how can banks expand their CSR to include sustainable development goals, SDGs, and support vulnerable sections? Universal Basic Income (UBI) can it help in financial inclusion? Benefit of UBI: provides a basic safety net, empowers low-income households, reduces poverty, and boosts economic activity. Challenges for banks: cost of implementation, potential misuse, inflationary pressure, and reduced motivation for work. Role of banks in UBI: banks could facilitate UBI through digital wallets, direct benefit transfers systems, and financial literacy. Debate: is UBI feasible in a diverse economy like India, or would targeted welfare programs be more effective? Challenges and opportunities of fintech in the banking sector. Opportunities with fintech: increased reach, improved efficiency, customer centric innovations, and lower transaction costs. Challenges for traditional banks: competition, data privacy concerns, regulatory adjustments, and fast paced technological changes. Collaboration potential: banks partnering with fintech companies, focusing on digital transformation and creating hybrid services. Long-term impact: will fintech disrupt or enhance traditional banking, and how should banks respond? Impact of Basel III norms on Indian banks. Objective of Basel III: strengthening bank capital requirements, ensuring liquidity, and reducing systemic risks. Challenges for Indian banks: maintaining minimum capital requirements, adapting to stringent regulations, and higher compliance costs. Benefits: increased stability, lower risk of financial crisis, and improved resilience against economic fluctuations. Discussion points: are Indian banks prepared for full Basel III compliance, and what support measures are necessary? Should banks focus more on retail lending than corporate lending? Benefits of retail lending: higher interest margins, low default rates, and diversified risk. Risks with corporate lending: increased NPAs, risk of loan defaults, and political influence. Should banks focus more on retail lending than corporate lending? Balanced approach, ensuring a mix of retail and corporate lending, focusing on risk management and responsible lending practices. Future view: should banks prioritize retail over corporate or maintain a balanced loan portfolio? Cryptocurrency: should banks adopt it? Potential benefit: fast transactions, lower fees, access to a global market, and appeal to tech-savvy customers. Risks: high volatility, regulatory concerns, risk of fraud, and money laundering potential. Current regulatory standpoint: RBI and government stands on cryptocurrency, pending regulations, and customer education. Discussion points: is it time for banks to explore cryptocurrency adoption, or should they proceed cautiously? Role of customer experience in success of modern banking. Importance of customer experience: builds loyalty, increases satisfaction, and gives competitive advantage. Challenges: high customer expectations, managing complaints, digital banking complexities, and service delays. Strategies for improvement: using data analytics, personalizing services, training staff, and creating user-friendly digital experiences. Long-term vision: should banks focus on customer experience to differentiate, and how can they implement a customer-first approach? The future of microfinance in India: challenges and opportunities. Importance of microfinance. Financial inclusion for low-income households, empowering small businesses and reducing poverty. Challenges. High interest rates, dependency on loans, repayment difficulties, and risk of default. Opportunities. Digital microfinance, partnerships with fintech, and rural development. Discussion points. How can microfinance evolve to be more sustainable and impactful for underserved communities? Are banks doing enough to address cybersecurity threats? Cybersecurity risks, data breaches, phishing attacks, ransomware, and insider threats. Current measures, data encryption, multi-factor authentication, cybersecurity training, and customer awareness. Challenges, keeping up with evolving threats, balancing security with user convenience, and regulatory compliance. Future strategies, investment in advanced security, technology like AI, regular audits, and collaborating with cybersecurity firms. Thank you very much for your patience.